Assalamualaikum warahmatullahi wabarakatuh. Let me introduce myself. My name is Vena Ameliya, NPM 234120039, Accounting Class 23A, Taxation Subject. Okay, definisci. Value-added tax, VAT, is an indirect tax imposed on domestic consumption of goods and services. VAT is charged to final consumers, but is collected and remitted to the state by taxable entrepreneurs, PKP. This tax is applied at every stage of production and distribution, based on the added value produced. The general VAT rate in Indonesia is 11%, in accordance with the Law on Harmonization of Tax Regulations, UUHPP, 2021. VAT covers taxable goods, BKP, and taxable services, JKP, and applies to imports of certain goods and services. The aim is to increase state revenues in a fair and transparent manner. Taxable goods and exceptions for taxable goods. 1. Taxable goods, BKP. Goods are tangible goods which, according to their nature or the law, can be in the form of movable goods or non-movable goods, movable and intangible goods. 2. Intangible taxable goods. The definition of intangible taxable goods is use or right to use copyright in the field literary, artistic, or scientific works, design patents or model, plan or secret process. 3. Exclusion of taxable goods, BKP. Goods resulting from mining or drilling results take it directly from the source basic necessities that are really needed by many people. Taxable services and exceptions of taxable services. Taxable services, JKP, are services that are subject to VAT, such as rental, construction, consulting, and domestic transportation services. JKP exceptions include health, education, financial, social services, and certain services, such as sending money by post, in accordance with Article 4A of the VAT law. Tax rate. Value-added tax, VAT rates. 1. General rate, 11%, valid from April 1, 2022. 2. Special tariff, 0% for exports of taxable goods, BKP, taxable services, JKP, and certain intangible goods. This rate is regulated in the Law on Harmonization of Tax Regulations, UUHPP. Tax base. Tax imposition basis, DPP, is the amount that is used as a reference for calculating the amount of value-added tax, VAT, payable. 1. Selling price, value of goods/services before VAT is charged. 2. Reimbursement, the value received by the seller for the delivery of goods/services. 3. Import value, the price of imported goods plus import duties and other levies. 4. Export value, price of goods/services for export. 5. Other values, special determination from the Directorate General of Taxes, for example, for public transportation services or telecommunications services. Input tax and output tax. Input tax is value-added tax should have been paid by the taxable entrepreneur due to the acquisition of taxable goods and/or acquisition taxable services and/or utilization of taxable goods intangible from outside the customs area and/or utilization of taxable services from customs area jur and/or import of taxable goods. Output tax is a mandatory value-added tax collected by the taxable entrepreneur who sends it taxable goods, providing taxable services. Exporting tangible taxable goods. Exporting taxable goods intangible and/or exporting taxable services. Example: an MSME sells snack products for IDR 1 million. These MSMEs are taxable entrepreneurs, PKP, with a VAT rate of 11%. What is the total price the buyer must pay, including VAT? Answer: 1. Known. Selling price of goods equals IDR 1 million, VAT rate equals 11%. 2. Formula for calculating VAT. VAT equals selling price x VAT rate. VAT equals 1.000.000 x 11% equals 110.000. 3. The total price the buyer must pay. Total price equals selling price plus VAT. Total price equals 1.000.000 plus 110.000 equals 1.110.000. That is all, and thank you. Wassalamualaikum warahmatullahi wabarakatuh.